Hello traders, Gary Wagner here, just before 11 o'clock in Honolulu, 5 o'clock in New York on Tuesday, the 8th day of July, 2014, and this is the daily report for gold and silver. We have the gold and silver market in essence unchanged, slightly lower on the day. First to gold, current print, 13.19, call it down about $1 on the day. The low 13.1260, the high 13.2570. You can see that range right in here on this 360-minute chart. Silver also in essence unchanged, down about 3 cents on the day with a low of 20.82 and a high of 21.28. More on silver towards the end of the show. You know, traders, over the last few days, just prior to the three-day weekend for 4th of July Independence Day, including yesterday and today, we have defined really the trading activity as it's traded in this narrowly defined range. You can see that range right in here with 13.11 on the low side. You do have a couple of lows that go a little bit below it. On the high side, 13.27, you have a couple of highs that go above it. In essence, though, we've been trading within this sideways channel. Now, what we're looking at, we put this in yesterday in this chart. What it is a basic fib extension. What we've done is we've labeled this first wave here, our corrective wave here, exactly a 61% retracement, and then we did an extension from here to here, and this is our starting point or the end or the termination of that correction. When we do that, 100% takes us to 1300. In other words, on an extension, if this wave, call this wave 1, wave 2, wave 3 equals wave 1, you're going to get it topping out at 1300. It has topped out for the most part at this point at approximately the 161% extension level. You can also see that there's real good support at the 23% retracement level. So, 123 extension level. And so what we found is that it is consolidating. I believe it's probably forming a base. And typically you can see this base being formed here. Of course, here is right before we get to drastically lower prices. But it is moving sideways and will continue to move sideways until it breaks. I believe it'll break hard one way or the other, but it should actually break fairly hard after trading sideways for a while. Now, of course, our stops are below 13.11. That would protect us. And if we see the market genuinely move above that, we would go ahead and trail our stops. For those that got out at 30, you still have the ability to buy in cheaper, but I would probably wait or sideline to see if this market is going to correct itself. And that's why I haven't put in a trigger or a recommendation, a trade alert for those who pulled profits to re-enter. I really want to see how the market reacts at this point. Now, interestingly enough, we get these same numbers by doing different calculations. Realize that especially with Fibonacci numbers, kind of like a puzzle, they're always going to fit together, and they're going to fit together in a way that you're going to come out with very, very similar numbers when you do different fib retracements or extensions. That's the nature of the Fibonacci sequences. They should all fit together. So what you can see here is two different retracements. One retracement from this rally here, one retracement from this correction here. These longer lines here represent this rally, and then the correction are these shorter lines here. And so when we do that, we come up with those harmonics. Harmonics simply meaning that we're getting these same numbers coming in. Here's 1333 corresponds to that 1327 that we just looked at, and this of course is 1311. So these are both 38% retracements, and they line up. And even on a daily chart, as you can see, you can really see this sideways channel that we have been experiencing within the price of gold. So traders, I've gone ahead and really blown up this daily chart so we could talk about the fact that what we had been witnessing ever since we hit this bottom here, and of course this is at around 1240, we would get this spike hike, we would get consolidation, a spike, small consolidation, so forth. Longer consolidation, and then a spike. We got a pretty sizable consolidation, a spike, and now we're back into a consolidation period. So what I'm looking at is to determine whether or not we're going to get more of this same type activity. In other words, we've gotten our resting period. Is this just prior to a break above this 1333? Because if you recall back from when we initially put the trade on, I had said that I don't really think we'll have much trouble breaking through 11 or 1321, but we should run into resistance at around 1331. Lo and behold, that's exactly what we're seeing right now. We are seeing some real resistance in this area. So are we just getting a market that has been forming the sideways base prior to moving up? Or is it signaling like in this area, an area in which it consolidated for quite some time, but then spiked hard to the downside? Of course, we would need a crystal ball to give you a definitive answer on that, but I can tell you that it is reacting and it is acting in the same way that it did all through June as the market traded up and then sideways, up and then sideways, and so forth. So there is, I believe, a pretty decent probability, I figure around 70-75% probability that we will see the market break above this resistance area here. Now, one of the technical keys as far as I'm concerned can be seen on this 2-day chart, Japanese average format, but that's not what's important. What's important on this chart is really this 0 point, this outer handle here on our Andrews pitchfork. Because what we talked about was the fact that ever since this marketplace hit our record top and began moving down, what we have noticed more than anything else is it has been dynamically trading lower and trading lower within this downward channel here. We had one fake out. This happened during the rally that began the end of last year, beginning of 2014, was a dynamic rally, but it only came to the top of the rally. It faked me out. I don't know if it faked anyone else out, but it made me believe that we were probably looking at some sort of breakout. As I've said over the last few days, nothing could have been further from the truth because the market came down, finding support at the channel line at about 23% retracement level. But it looks like we're getting a different story here because now it could just come right back down and go back into alignment. But over the last couple of years, this has been really the longest point and the only point where the market has actually broken above this channel line and stayed above this channel line. Is that significant? I believe it very well could be. So what about silver? Well, silver is also at this point trading sideways, and silver has that tendency to outperform gold on the downside as well as the upside, but we're in this defined trading range once again. Silver, when it gets caught in this trading range, can last for a while, but my sense is that here is our moving average, and that's sitting at 20.90. Our stop, of course, is at 2080, low today 2082, but as long as it can stay above this moving average on a closing basis, I think it is showing some not only strength, but a little bit of base building. I also think that it is going to trade in unison with gold. So if gold breaks above the 1 point we talked about, which of course is 1333, 1331, if we see gold break above that, I think we'll see silver break out of this muck. In terms of where I think the market could go, as I've talked about, it is this top here, which is just above 22 to 2220, that I think could be a very, very reasonable target to actually see the price of silver go to. Again, maintain current long positions for those that still are long the market in both gold and silver. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Wednesday for another daily update and review. Bye-bye.